Let's transition into the thing I've been excited for all day during this show. And actually, let's bring up AMD and let's talk about it. We're going to move into our coach's corner now where we talk about picks or setups or trading strategies, something, on a regular basis where we look at it, we analyze it, and we help you guys understand the way that we're approaching something so you can improve your skill sets and elevate your learning. I think you used that phrase there yesterday, Tyler. AMD is a stock mark that everybody trades. It's one of the most popular companies in the marketplace. I know it's a fan favorite amongst active traders, veteran traders, and new traders alike on a watch list perspective. But you love trading it for a different purpose, and you're not really a directional type of trader. You actually have a naked put on this stock. Is that right?
Yeah.
Okay. So kind of explain what your position is. And let's just start with the simple question. Why did you pick AMD to begin with?
All right. So, I'm going to walk you through the entire mindset, and you guys, I want you guys to push back whenever you have questions or you say, that's dumb, whatever, right? And I'm going to walk you through the mindset of how I sell a naked put. Well, at least when it's not on garbage, high volatility, 8,000% IV on the monthly chain, then I just throw naked puts because whatever. But when I'm actually spending the 95% of my portfolio I care about, I walk through a process. All right. And so one of the things that it starts with is I want a company that I respect, a company I like, because when I sell naked puts, I don't do them as trades. I do them as the start of a cost average down plan if things go wrong. So I start with the fundamentals. AMD obviously has had a lot of great progress. I mean, go look at Intel's chart and I'll let you know the fundamentals of AMD because taking market share. I believe in this company. They're doing great things from a visionary standpoint, capturing market share and so forth. And, that's been reflective in price for a long time. All right. So, but, when I look to invest, I usually want to get a reasonable price or at least relatively reasonable, especially when I start a cost average down plan. So that starts the analysis as far as why I select AMD. But there's other tech companies I like, too, right? So it's like AMD's not the only great tech company. And AMD has had a little bit of oomph compared to tech as a whole. There's been a little bit of outperformance in recent weeks. I mean, go look at NVIDIA, go look at all these charts. They look like they're stuck in quicksand right now in these long-term ranges where just momentum has died, volatility has died. I don't have that momentum because one thing I like to do as a cash flow trader, I like to piggyback off you momentum traders all the time. And so I like signals that are breaking out. I like signals that have a little oomph. And so AMD separates from some other great tech companies because there's lots of great tech companies, right? But you can't own them all. So that kind of is why I selected AMD from a fundamental relative strength. Now let's get down to the technicals and let's go to weekly chart. Now, usually when I do my technical analysis on a naked put, I do it on a weekly basis. I'm not a swing trader. Swings can change a lot. Swings can change a lot in the matter of weeks. And normally I'm selling 35, 45, 60 days out, just depending. And so a lot of short-term things can change in that time period. So I want to do my technical analysis from a weekly chart when I'm selling naked puts. Now, the first thing I look for is I look for a strong horizontal support level. So take off the moving averages for a second. We're going to add those in a minute, but I want to look at just good. You remove my 9 alone. Oh, you dirty, dirty, dirty man. So I want to look at a recent short-term support level, and I want to have 3, 4, 5 tests on the weekly chart. Ideally, not in a row, but spread out over a couple of different months or a couple of different time intervals. And I have that on AMD. I have a really strong support level in the 74-ish range where we came down in 2 different time periods. And when I look at these two different time periods, because I analyze the market, I know what these time periods also were. One was in the heat of election risk, where things were worried, selling off on the broad market, and on the technical shakeout where everything was getting bloodied. AMD stuck that support level even in high volatile market environments. That adds, from a qualitative standpoint, some extra strength. Now, I don't need the qualitative analysis. Let's say I didn't know this company at all, or I'd taken the last 2 months off of trading. I would look and I'd be like, wow, that support level, the bears had plenty of chances to send that lower. They had a chance to send it lower 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, failed every time. So they had plenty of chances. And when the bears have plenty of chances to fail and they keep failing, usually one direction for it to go in the short term, that's up. That's what's happened to AMD. All right, so I got a support level there. I also now have a secondary support level in old resistance becoming new support. I had a very clear horizontal on the weekly that stands out. Resistance level in which price broke. Now, I ignore wicks as a general rule in this analysis. It's to wick or not to wick. That's the eternal question. I ignore that, and I give this credence as a bona fide support level. So right now I have two potential support levels, a rock level support level at 74-ish and an old resistance level that could act as new support. All right, so there's 1, 2. Now let's put on those weekly moving averages again.
I got a question before. Yeah, exactly. Bring the moving averages back up if we can, because I have a question on that. So when you are traditionally a very much a moving average guy, and you had Tyler remove the moving averages for identification of support. I'm guessing you did that just to teach that to the audience, I'm sure, right?
Well, I do, but I also start my analysis on a clean chart without any indicators, because I want to see where those horizontal resistance levels are. I want to see the cleanness of the pattern before I do other secondary indicators. Now, for me, moving averages are very primary, but for most people, they're secondary. And so like when I'm teaching and when I'm doing these things, not everyone is going to be the moving average just there. That's right, Pico. I like it. All right. So I got two potential support levels working with me. Now, I also have two rising moving averages, one in my girlfriend, the 9, and two on that second most underrated indicator in technical analysis, the 20. Now, we see the last time it came down to the 20, just a few weeks ago, 5, 6 weeks ago, we had a hard stick and a bounce. Right now, it coincided with everything going up, so I don't give that a lot of credences, but I do. I see it bounce off the 20 a lot. So when I look at this now, I'm right. All right, I now have 4 potential support levels that I give credence to. Old support, which is the basis, the number 1, that's 74 level, the old resistance that can act as new support, and then for fun, I got some rising moving averages as well. And so I got 4 layers for this to come down. Now, I also, and we've talked about it at the start of the show, I also look at the market as a whole. And remember at the start, I was like, well, tech as a whole also has support levels, lots of support levels. Like, so if you go to the Qs, I also have a lot of things in which the broad market in a fairly similar pattern has to get through. So if the market, because once again, if the market crashes, well, then a lot of my trades are going to go along with it, right? It's really hard to swim upstream, which is why you better want to own it long term, because every once in a while something happens in which you do own that stock. But on the broad market, I also got all kinds of crap for it to get through as well. And so I got support levels. I don't have a bearish theme that scares me right now. I got all kinds of support levels on the broad market. Now going back to AMD, I have all kinds of support levels that it has to get to. All right, so I love the chart from a naked put ownership cash flow perspective. Now the question is, all right, where do I sell the naked put? The technicals all line up. I got multiple support levels. I got a rock hard support level that I trust at a price I'm comfortable with at around 74. I got broad market analysis that I'm skewed very bullish on, especially from a cash flow perspective. Now, all right, so I love it. Check, 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 check everywhere. Now, where do I sell my naked put for ownership? Now, traditionally, what I like to do is sell a naked put above the bottom support level that I believe in, which is at around 74. And so I love to sell that above that support level, because I want, in an ideal, I call it the sweet spot for naked put selling. I love it. Doesn't happen very often because most of the time they just expire worthless because you do all of this analysis, right? And you're like, get these really great setups and these really great opportunities, and the stuff just expires worthless. But when I get put something, I want it to be above that support level, because if I get put the shares and the support level holds, man, I'm in a really good spot in that situation. That's a really good situation to get put the shares. And so I want to sell that naked put above the support level. Now, someone really aggressive could sell it at 90 or whatever, or just buy shares, whatever. I don't know, but this is how I do it. And so now I'm looking at, all right, so let's go out and let's find a strike level that makes sense to me. And so I look at, and let's go to the trade tab now. Let's go to the trade tab now. And so I know that $75 level is what I'm judging as support.
Well, before we get to that strike part of it, so you'd go through this process where you're reading the chart, AMD's on your watch list, you evaluated all those levels, you know where your key support is, you've got a thesis behind it. That was very insightful, by the way, and I think our audience is agreeing. I'm seeing some nice comments here. So a lot of good stuff there, Mark. But then you come into the option chain. What is your next choice? Because
well, first of all, I want to look out before I look at strike prices, I'm going to look at the time period available. Now, I personally love selling in the 40-ish range, anywhere from 41 to 49 days. Sometimes I'll go into the 50s, sometimes I'll go into the 30s. I don't really like going too far out in time because I want to do this every month, right? I want to do it in January, then I want to do it in February, and then I want to do it whenever, if that option is available to me.
Tyler, I want to ask Tyler a question on that real quick. Tyler, come on in here. What is your preferred time till expiration based on back testing, also 15 years of trading? I know you know the answer to this for yourself, but also just for most people, when do you like to sell?
So 45 days is the sweet spot. I usually teach 30 to 60 days. So that would be right in line with Mark's commentary.
Right in line with the way that you do it as well. Okay,
Yep.
Go ahead. All right, good. Go ahead, Mark.
It's almost like it's the math, right, Tyler? It's like that where that theta curve starts to decay. I mean, it's like, I mean, you can sell weeklies, but there's that spot in the chart in that 40-ish range where you've just done it enough and you say like, yeah, this is when it really starts to decay.
Yeah.
And so right now, looking out at January, like 36 days is still plenty of time, right? And so like looking at 36 days, I know I still am in a really nice spot in the theta decay curve. Got 5 weeks till expiration. And so I look out and I do that spot check of the premiums just visually. And I know, because if I was only at this point now being like, oh, I'm only getting $20 or $30 for a 77.50 or an 80, I'd be like, no, I'm not going to tie up the margin. I'm not going to get that annualized return on my money that I'm comfortable with. And so this part of it is very visual. I don't have a mathematical formula, but I look at this check and I'm like, oh, I'm getting 110 or 160. Okay, that's perfectly fine. I know just from experience that my annualized ROI is going to be acceptable according to my standards. All right. And so
yeah, but why 77.50? That's really, I mean, as we're looking at this and thinking through it and talking about it, it'd be the only question so far that I would have, because based on your logic, 74 is your support, 75 gives you more cushion. You're a low delta guy. You could have still picked up $75 at the 75 strike. I know you got more money at 77.
I want ownership.
You want the stock.
Like once again, I'm not doing this as a trade. I could find all kinds of things to just sell naked put on a trade, but I do not teach selling naked puts on a trade. I know as Tackle Trading, we are very against naked put as trade. Naked puts are an amazing vehicle for investors. They're an amazing vehicle when you actually want the shares. They are a terrible vehicle that is misused, in my opinion, for individuals just trying to make some quick money. And so not a huge fan of trading. And so because I want the ownership, because that support level is there, man, that's the perfect spot. It comes down, I get put, the support level holds, I get it at a great spot, and then I can start selling calls and maybe out of the money calls quite a bit and get some price appreciation on the support bounce like we've had a couple of times. And so now I'm looking at strike prices above support. I got 77.50 and 80. Because I am in a potential breakout scenario, and I choose in this trade the 80. Now that's a little aggressive for me, and you're like, it's a little aggressive for you. It is for me. It's very aggressive. But the reason I'm going a little more aggressive at the 80, aside from the 77.50, is one, that 20 weekly is above $80. So I know there's a good chance that is going to act as a buffer, if nothing else, in if price were to start going down. I'm very bullish on the market from a cash flow perspective. I don't have, on the broad market as a whole, don't have a bearish theme that's scaring me. I don't have like things that are worrying me. And so because of the technical analysis, and I got so many ways to make that money. I mean, if the old resistance level acts as new support at around where is it at? Around 87, game over. If the 20-day moving average catches it and AMD goes up in price, game over. I mean, it's just going to clear. If the broad market just stabilizes, there's so many ways right now where price just trades sideways at a minimum on the broad market and in AMD. It just makes me feel more aggressive. A+ technical scenario, lots of support levels. And so I'm just a little more aggressive, not a whole bunch, right? I could go up to 82.50. I could go up to 85. There's lots of things I could do to be really aggressive, but just a little more aggressive for me to get a price above a support level, knowing that unless the market just slides, it's just going to expire worthless. But that's the logic of everything that I go in right now on this particular trade. Why that strike price? Why that expiration month? Why this individual stock?